What's up, guys? This is Gil here. Welcome to another portfolio update this week. This week was a pretty crazy, volatile weekend. Week, just like every other week, right? Um, so we ended up Friday pretty good. We were up $5.40, but for the actual week, we were down $5.93. We matched the S&P 500, so we were down 0.29 of a percent. Let's take a look at our investments. Okay, so my real estate, it was down $4.72, so 1.15%. Finance was up 0.06. Healthcare is up 1.54. Utilities is 0.13. Tech is down 0.51 of a percent. Consumers is pretty much even, 0.01. My gold is down over 0.5% at 0.63. My energy stocks are down 0.71%. Telecom is down. AT&T took a big hit with a couple articles and just missing earnings so it went down 2.57%. And my industrial is down 0.5% at 0.49. So also a couple changes. I did trim down some of my portfolio. I'll put my link down below just until I can dump more money into it. Next week I'm putting about $800 into it to grow it, but as I get bigger, right, as my portfolio gets bigger, that's when I'll start adding more and more. Right now I have 40 holdings with the new portfolio. I just took out some and I'll add them slowly on to continue the growth as I can put more money in. So this is this week, guys. It wasn't too bad. It was a pretty volatile weekend. The last 2 days, Thursday and Friday, it was we were up. So yeah. Now let's continue. There's a couple things I wanted to talk about. All right, guys. The next thing I wanted to talk about was the expected returns for the next 10 years. There's quite a few articles going around where it's expecting lower returns for the future of equities, mutual fund stocks, bonds, all the goodies. Vanguard has been reporting it since last year, but it's getting more traction as, people get scared because, all the volatility in the market, things like that. They're expecting 4 to 6% equity returns. Other returns we're looking at for bonds are 2.5 to 4.5. International equities are a little bit higher, but of course riskier, 7.5, 9.5, and then international bonds, these are hedged 2 to 4%. Now, this is it's pretty interesting because then you got to figure out a strategy that works pretty well for this type of environment, correct? So obviously I'm pretty sure most people that watch my videos are investing and learning about it, or they already have their own portfolio set up and they're building on their strategy. I obviously chose dividend investing, dividend growth strategy, but there are many out there. There's just a few things you can actually do to make sure that your returns are not eaten away by other stuff, like life and things like that. The first thing that I did a couple years ago was pay off my debt. Like many of us know, if you have a ton of debt, especially consumer debt, actually mostly consumer debt, you shouldn't be investing. You need to take your money and pay off as much of your credit cards as you can. This is the average for 2019, the average percentage rate for credit cards in different categories. Most people have like store, cash back. They said this is insane. I had a couple, but they were like 12, 14%. But still, that's still more than, what I get back from investing. So, except for the last couple years, but still. It's just a good thing to do. Those payments could be going elsewhere. Managing that type of debt it's really important in your life. That's what keeps you broke, So just making sure you don't have tons of this, paying it off, being responsible when you do use it, because that 21% is just crazy, eating at your profits. All right, guys. So once we've paid off our debt, the one thing we do have to remember, especially if you're doing long-term investing, regardless of the strategy you're using, some people are going to be in growth investing. Some people are going to do growth dividend investing, value investing. There's a ton of strategies. It just depends on what you decide to do and stick to, right? And the one thing we have to remember is just to keep investing. We got to take advantage of the dollar cost average, right? This is where you pretty much invest. Here, I can show you a chart that I found on Investopia that explains it pretty well. So this person is pretty much putting in $50 at a time every pay period, right? At the end of that, they have $500. Their average cost for the S&P 500 index was $10.48. This is obviously hypothetical, but this is because it averages out the prices over the time that he's invested. Sometimes he was low, $10.95. Sometimes he was really high, $11.25. But because he invested over a period of time, small payments, the dollar cost average took effect. It averaged out the cost of the index fund, which in the end made him $36.79. Sorry. Yeah, it's important to know, like, that as long as you keep investing, you'll sometimes be buying at highs, and sometimes you'll be buying lows. So at the end, it doesn't really matter, since they're going to average themselves out as long as you keep investing. A great example is this. So this is a pretty neat calculator you can grab. I'll put the link below. It's let's say you start in November 2000 to 2009. The starting amount is what, $10,000. Your monthly investment is only $100, right? Keep it constant, and we're going to calculate. So your total investment, $32,800. You would have had after tax, right? You're looking at $81,898.39. Your return would be 7.53. Now, let's say you didn't put in money, correct? So let's say you just put in your $10,000 in there, okay? You would have put $10,000. Your return would have dropped 5.82, because obviously you're not taking advantage of the dollar cost average. You would have only had $27,023. That's a big jump for $100. Now let's say I do 1,000. We can see that jumps drastically over that period of time. Over $500,000 return. Your return actually goes up because of, again, dollar cost average. We're buying it at different times, different prices, and you would have only put in half that, $238,000. This is just a really important lesson. As long as we keep investing, we'll be fine. As long as we have a solid strategy that's been proven before, we just got to tough it out. There's going to be crashes in our lives, especially if we invest for 20, 30 years. We're going to see our ups and downs, and we just got to keep with it. Thank you, guys. I'll see you guys next week with another update. I'm going to deposit some more money in. I get paid Monday. I'm trying to do at least $1,000 to $1,500 a month. Until I get in my new job, then I'll be investing more. But yeah, so thank you guys so much, and see you guys next time.